All right, everybody. Welcome to the weekly roundup. I'm CVO Crypto, joined with Magic Internet Money and Burr Max, and together we're leading crypto. And we come to you live is close to 10 a.m. Eastern, Monday through Friday, every week, and looking to bring some analysis here for the crypto market. Probably a stab at the SPX, DXY. I'm going to take a look at Ethereum. We have some nice order flow, open interest as well. And just a good bunch of TA, right? So we're going to just jump right on into it, kind of get a good overview of the week. Yesterday we had a guest on, so we didn't actually get a TA update. So we've got about 48 hours worth of potential updates here for you. So hopefully you're interested in our content here, and if you are, be sure to like and subscribe. And we're just going to jump right on in.
All right, yeah, let me do that. I'm getting the chat up on my other screen, so give me just a second here, and we'll rock and roll. We were talking about that, but no, it's not chat GPT. There we go. Get that muted. That way I can interact with you guys. Look at that. We got Matt, Urska, Farouk, OC's in here, of course, Cairo, Nick, Richard, and I think that's it. Richard says we need more volume to break this. Yeah, potentially. Yeah, let's take a look at the chart and we'll talk about what I'm taking a look at myself. So it's been a pretty easy move up, in my opinion, once we got it. This is the fun folder. So anyone that's in the group, we brought this idea up all the way back here, and we said you have two ideas, right? And we knew that if we were going to get the move down into this 13,880 level, we were going to see it by the middle of January is what we had said. And vice versa, you had this move that was potentially there, back testing your old range, right? And if you go to the volume profile on TradingView 40 tick, it is the POC. If you go to something like ATAS and you worked out this range by its time point of control, so it gives you a good confluence that this is a pretty big area to break through. Now, one thing to note is that if you're viewing this through ATAS, which I don't have up right now, but I'll talk to you, you've got a volume point of control ahead of you still. So as long as you are still holding on to the low of this range, in my opinion, which, we can roughly say is somewhere between like 18.6 and 18.5 probably, you would be looking to challenge into this region. And if it breaks up, $20,050 is that volume point of control I would be looking for. So that's why I haven't closed my long. I've taken profits on it, of course. I'm halfway out of that position. I've been really good about scaling out in small increments because this is a long-term swing. So when I say small increments, so we're talking like 5% of the position is taken off the table. And it doesn't sound like much, but it adds up over time, and you're not getting all in and all out in giant chunks. That way you're leaving this position to really kind of become a swing position if it's going to. So this is not a place I'd be looking to long. I know that's one of those things where I say I'm only long and I'm not I haven't short the rally yet, but it's just not a good place to long. You're right at resistance. That's the only thing I'm going to say. You have this channel that's coming in here. Now, I chose these 2 points because I like the harmonic effect here, the AB equals CD. And technically, the 1-to-1 on this is a little bit higher at 19,199. So I believe our overall high is 19,182.50. So we should have tapped that this morning. And the important high I would be keeping an eye on, and let me get rid of some of the stuff on the chart here and we'll talk about it. Get rid of the fun folder here. Some of this other stuff that we were using for yesterday is I would just come down to the previous day high at this point. I would be looking at this 19,122, I believe, or 19,142.50. And if we start coming up here, finding resistance anywhere within this region, that's where I would be looking for some form of a potential trigger for a low time frame, like scalp short anyway. And then I would just be looking to fill in some of these inefficiencies. And again, you have to remember that 18.5, 18.6 region is going to be your big support that you need to hang on to, because that's the value area low of the prior range, in my opinion. So you just mark off your most local lows like so, and you would just say, if we got that failure and we came back down to support, this is the region on the chart that I'd want to see held, just somewhere in this generic area. And I shouldn't say generic, but it's a pretty small box between 18,611 and 18,710. I would want to see this area held. And if I extended this to the left, actually, I bet we would find some confluence. If I recall from when we actually did break down, this was a really nice back test. There it is right there. So when we did break down, we had this massive wick down. And I remember this retest right here into this zone, because this was also the TPO value area low at the time. And so this is going to be an important area on the chart just to be hanging on to. And you can see from a local market structure standpoint, it just makes sense. So if we're going to put in a range and consolidate here up against this resistance, the time point of control, the 40 tick volume point of control, this is your 6-month pivot, right? You got your golden pocket from your most recent high. If we're going to put in that move, then yeah, I'd be looking to consolidate here and break up, right? However, if price starts prolonging this range and it starts breaking down, we do need to start looking towards where our next supports are going to be at that time. In terms of resistances, if we do break above, obviously we do have that level at 20,050. I believe I still have these levels on my chart. I believe the point of control is right here. There we go, $20,000, right? So you can see how important this level was, okay? Very, very important. I don't know that the point of control is going to give much resistance just based on where we are in the chart. Like you can see that it was support and resistance here. This is when we had single prints back in October before the breakdown. I think I would still be looking up to like 20,400 at that point. Mainly because you do have some key pivots there. This is the yearly pivot from 2021. This is your most recent Q4 pivot of this year. And then if you went to just a 60-day, and I like to look at things on a 60-day basis as well, you'd be looking at 20,434. So I think at that point, and this is a really big box, and I do apologize because I know that's not something we're accustomed to doing, is giving such a large zone. But if we were to break above the level we're at, I think your first target or next take profit is going to be that 20K area. However, I would then move the real resistance to me up a little bit. And I would say I would start marking these local highs out realistically between about 20,000, probably 400, all the way up to 20,900. So you just got to be aware of where you are on the chart. Understand that if we get this move up and it fails and breaks back down, we're targeting the lows of our current range. If we get that bounce here, we can trade it back up and treat this as a range. If we don't see that and it rockets through and heads to 20K and then 20,400, those are just additional take profits for me. But if I was looking for a trade, I would be very, very patient here because you're getting that move right here into resistance. You've taken the previous day high at 19,142. Now you need to see if the weakness is going to enter as a deviation and bring you back down to the bottom side of the range. And it doesn't seem like much, but even if you're a little late to this, right? Let's say you don't get in until like 19,000 or so, and you take it down, that's 1% to 2% move on a day trade potentially. And that's a pretty good day trade, right? And if you wanted to do, something a little different, you could very easily, now that we've marked off where we know is going to be very important, like structural support. Also, it was the old range value area low. You could easily come in here now and say, okay, I'm interested in this price action right here. And if we start breaking down, I'm targeting the point of control right here at 18,843 first. Then I'm going to the value area low at 18,700. Anything below that in this blue box that Magic drew on the chart is my next take profit. And I'm looking at these areas for reactions. That's only in the instance you see something, like this, right? It becomes a deviation and then heads down. Okay. So that's what you'd be looking for if you're day trading this. If you're not day trading this and you're just like, should I keep holding these longs or should I keep holding my bags? I'm not a financial advisor. I'll tell you what I'm doing. I'm continuing to hold on to my long positions. Even the positions that I am closing, I trade inverse perpetual. So how I'm managing those is when those positions are, the profits are taken on that 50% of the move that I've already taken, that first 50% of the position, it goes right back into Bitcoin spot. So I'm not in USDT, I'm not in USDC or whatever, collaterals out there. I am back into physical Bitcoin, and I can take that and I can put it back into a trade, or I can just leave it in spot and let price go up from there. And, this accrues in monetary value, right? So hopefully that was helpful. But that's all I've got on the Bitcoin chart, to be upfront with you guys. Those are the levels. So you're getting that move up above now. You are getting some resistance. So we will need to see buyers stepping in. I don't have XO up right now. I just turned my computer on this morning. I'm not going to lie. I took a little bit of a late morning to this morning, excuse me. And I'll let Max kind of go through that since we have a little bit of fun stuff going on here. Max, are you there? I will address Leo's comment here. Is this considered a bear rally? Actually, I would not consider this a bear rally yet. I think if this becomes a bear rally, you're going to get a true bear rally. I think you're going to get higher prices. But as of right now, if we zoom out, that's a great question, Leo. We do need to zoom out because, a lot of people want to see that. I've got a lot on this chart. Let's go over to this one's, pretty sure this one's blank. And we'll talk a little bit of market structure, right? Yeah, this one's got way less stuff on it, which we all like, right? So if we're talking market structure, Leo, you know, in terms of like a bear rally, I think that would be could be an appropriate way to describe it. You've got a high, a lower high, and potentially a lower high here. So until this is broken right here, and the reason I bring that up is we have this idea of in the fund folder yet again. Let me copy it over and I'll show you. This was kind of how I was gauging the market in the sense that if we were going to get a move down, this is what I would be looking for. There we go. It's off right here. Okay. So let's get rid of these brushes. And the only reason that this is useful is now it's going to go ahead and map out the important pivots of the market and really put market structure first. And so that's important to note. So when you're looking at this, you've got a high, a low, a lower high, and now you've made a lower low. So what do you need to do? You need to take C out, right? You need to take this most recent high out. And if you do that, you're going to get a significant move up, in my opinion. And I'm looking up to as high as $26,000 for that, to be very upfront with you. I mentioned that weeks and weeks ago on Sin City. I've mentioned it on Debate Crypto, and I mentioned it again yesterday on Debate Crypto, that this has the potential. And the reason it does to have this really nice bear rally, as you put it, and bear rallies can be very, very aggressive, because I was trading in 2019 when we had some of them. What you would be looking for is, you can see how we had our breakdown point from the prior range. You could then basically box this off because you see the structure that we've put in, and I'm going to get rid of that structure here in just a second. This is going to be the level to reclaim, right? So very much in line with what we were just looking at in terms of support. Like, okay, if we break down where is the structural support, we knew where our volume support is now. It's like 18.6, 18.5. However, if you go down a little bit lower, this is from a structural standpoint where you need to be holding. And if you break through this, I would be looking to backfill this range. Now, we did something like this back in 2019, right here. Very similar situation. This was the example that I gave. And the reason is you had this really big descending triangle, which if we come back to this, not to jump you all over the chart, you have a really big descending triangle, and you broke down out of it aggressively. Everyone's looking for 10K. And when I was trading this, everyone was looking for $6,000, right? So what happened was you broke down, you front ran $6,000. I think we only hit like 7,200 or so. And then you got a 42.5% rally that was sold into, back down into that mid 6,000 support, back to 10.5, and then down. And this was just a statistical backfill. And so what I mean by that is, if you went to Q3 of the 2019 year and you were watching it all the way out to September 30th, right here, this is your naked point of control for that session. And all you did was come up, you backfilled that, became resistance, and then once it was broken, pseudo back tested here pretty nicely, and off you go. So this was the scenario everyone's been looking for in this bear market. They've been saying we're going to get a 2019 style bear market where it's sideways and stuff. You're finally seeing that because the recipe was there. Everyone was looking for 10K. You had the massive breakdown of the obvious pattern. Price breaks down, front runs the target, traps a lot of, people selling. Well, actually, we didn't really have that, but you get a lot of people caught off sides waiting for lower targets that don't come. The price rallies, they FOMO back in, bull market's back on, right? Only to dump back to these levels and eventually make a new low. And I think that if we're going to see new lows on Bitcoin later in the year specifically, this is the pattern you're going to have to work with. Meaning, you come back up, you take some of these highs, you fill into like this yearly pivot, and the yearly pivot's extremely key on the high time frames. Fill into this, maybe you don't even make it that high. We might not. You really want to start targeting these highs, this high here, this high here, this high here, and then you've got this, overall structure high right here in terms of like average of price. But that's where things get out of hand, because everyone is looking for what? 10K, 12K. Even us, we're looking at it going, we know the zone is there. However, we have to be ready to trade this the other way if possible. And so that's what I've been doing. And I think that the recipe is there that you could get a really big backfill. And am I saying you're going to get a 42% move? I think that's a lofty thing to suggest. But, if you got even a 42% move, where does it put us? It puts us back at this local high. And so now we're looking at this as we just boxed off an area here between 20,400 and 20,900. So I would say you have to pretty much consider that. You'd have to say, okay, I'm going to mark out 21,468 all the way down to 20,400. And this zone is really going to be a very, very important area to reclaim, because you're going to be backfilling a lot of statistical things. And if you clear this zone, I think that you will see this number up here. However, you've got a area to work off right now in 19,150. And if it's cleared, I do expect to see this box. And that would kind of be the bear rally and get people super excited. The bull market is back. You're already seeing people say it. The bottom is in. And I think that's a mistake. Now, if I'm wrong on it being a mistake, I've already purchased Bitcoin. I'm already long. When I close and take profits on those, it goes right back into Bitcoin. So I'm not missing out on anything. So again, this does come down to position management on yourself, so that you're not missing anything. As a trader, that's the way I'm handling it. It's up to you to decide what you're going to do in terms of, capital management, because everyone's situation is unique unto themselves, right? But that's how I'm handling it. So I hope that's helpful. And I don't think there's any other questions that I can see. There's 25 of you in here. That's awesome. Yeah, so I'll turn it over to Max, let him go through the order flow up here. It looks like we are getting that push up. So, and that way I'm not rambling too much here. We've been going for about 15 minutes nonstop. Yeah, well, altcoins aren't really rallying. You are correct. Bitcoin dominance is kind of kicking up, but I think Ethereum's doing quite well. So, it just depends. I'm not a huge speculative altcoin guy, but I do hold some. Obviously, I picked up Polkadot. I have some Atom. QNT was one that I've been trading. There's altcoins I believe that have been trading okay. QNT is kind of stalled out, but that's neither here nor there. I'll let Max come in.
Share my screen. Okay, so what I want to go over is, I'm just going to go over some trading view stuff quickly. We've got the area that you're looking at, Magic, is the quarter four high, not to be forgotten about. Now, the area that I actually really want to talk about is the quarter four open. And the reason being is I believe it's going to be quite a significant level. You also have a naked point of control just above it. That's why my box is leaning just a bit over. If I can find what I just hid that from. Naked levels. There's a naked point of control from the day that we had a very big decline in price. So that was the naked point of control from there. Slap bang on the Q4 open from last year. And the reason that I'm looking at this as quite a strong level is because if you look at the Q3 open and really zoom into price, it was so significant throughout the whole quarter four quarter, effectively. It was so significant. It was offering as highs and lows throughout the whole period of time we were there. So I do believe that we'll have some resistance here before we get any higher. Now, with the comment that someone made at the start, I think it was Richard Wright, I don't know whether you were mentioning that there's not enough volume here to consider this a high, or what you were meaning by your comment. But I would say this is definitely not enough volume to consider this a high. Really zoom in and look at it. If you go back in price, look at every significant high and low that there is, what we are getting right now is just nothing near what one would expect for it to be, a significant high or low. In this case, a high. It's nothing near what you'd expect. So I do believe we test higher. I do believe this area is going to be resistance, and I'd imagine, the real volume is going to come in above that quarter four high, because that's where all the liquidity is. Anyone that is short from up here still, or anyone that's, thinking of taking shorts here, there is no place to put a stop loss other than this high. And then when you get above there, everyone's going to think, higher high, I'm going to buy, and then they get wrecked. That's where it's going to be. That's where it's going to come in, the liquidity. So that's where I do believe really this is going to stop, as long as you're not losing these lows. But anyway, that's enough of my basic ass trading view knowledge. Let me go in, and of course,
that's actually a really good shout. I'm not gonna lie. So if you guys are paying attention, that quarter four open is, because I do remember we traded quarter three open pretty heavily. I totally forgot about it. There's so many levels. I just kind of skipped over it. But yeah, 19.4 is going to be probably a decent area.
And it's the top end of that golden pocket as well that you pulled. It's the top end of it.
There you go.
A few things there. We've noticed recently in the group that you've come up to the 618, reject a little bit, but then you're always coming back up to that 6.5, pretty much always. I know CVO was harping on about that a while ago. So, it does keep coming up. And the fact we have rejected from what is the point of control on TradingView for that range and the lower end, and then now we're coming back up. Maybe we do just come and tap that quarter four open, sorry. But anyway, I'm going to go over a trade that occurred yesterday that I've never seen in my years of trading a better swing failure pattern. It was so obvious. It was everything that you want. And I'm just going to go over it now because it turned me on a little bit. So after the CPI data came out, huge, fuckery in the charts, not really a way to trade it, took out both sides. But we always say, you have to wait until after the news has come out and it's calmed down a little bit and it gives you a trade. Never have I seen it give us a trade like this. It was insane. So let's go through it. So the low, this was the day open at the time. So now the previous day open, obviously. You came down in the mess of everything and came down and tapped it. And then a bit later on, you saw a load of buys come in just after it. So, it's okay. It's a good thing to see buyers come into the charts until they get put underwater, which they were. So then where can you look to get taken? Obviously, you are looking straight for, the next low for where their stop losses are going to be. And that's what occurred. We came down, liquidated loads of people. You always need to be aware of where these liquidations are occurring. Normally, they're good that you can't buy on or short them. But, you're getting liquidations for the shorts here. You're getting liquidations for the longs here. They are good hints to what trades you should be looking at. But obviously, you can't trade them because you get wrecked on moves like this. But let's zoom in. So you're getting liquidations, but you didn't really come below the low at this point. However, when you do, you have a load of shorts enter the market just below the low. Now, everyone in the group hears me harping on about SFPs. And if you watch these public streams, you will continuously hear me talk about SFPs and what you want to see. This was picture perfect. I've never seen one like it. This easy to identify and to trade. All the way in this candle was at the lows. A ton of heavy shorting as you were breaking through that day opening and going below the low. Almost immediately after all these shorts entered, you had buying your balances, buyers coming into the market and then pushing the price higher. So from where you've gone in the price action, from seeing buyers come in and getting trapped to then seeing shorts enter in a point where you'd think, why are they shorting here? You shouldn't be shorting straight into the day open, into lows. It's just not what you do. These are breakout traders, and this is why they're getting wrecked. Immediately what occurs, buying imbalances, buyers come into the market, trap traders. It was just, oh my God. I have not been excited for a trade in a long time, and this one really got me excited. I was thinking about this one all night. And then what occurred, you came up, if you're targeting the VWAP, you got your first take profit. Buyers continue to come in, push the price up. Delta coming in positive, open interest coming in. It was just such a sweet move. Everything about this was so good. Then you stall for a little bit, but then as soon as you get above the VWAP, you just go straight off to the moon. Honestly, that when I talk about SFPs being the best trade there is, I am not lying. They are the best trading setup that you can take the time to learn. And when I'm going over, these are the things that you want to see. This was everything that you want to see. It was just perfect. And then you get the rise up, obviously on decreasing open interest, which is just shorts getting taken out and forcing the price to go higher. As when they hit their stop losses or liquidations, obviously it's a market order and it drags the price up. You can see all these liquidations occurring, and you even get 2 million in this candle, which is I've not really seen a 2 million wrecked bubble in a very long time on XO. So it's just so nice to see. Sometimes seeing the volume come in, it is official. The volume is back, which is always good. And then what you had later on in the day, you had some SFPs occur as you came to the bottom end of that golden pocket. So you have to be aware of levels on the charts on TradingView to then come and look and identify where you want to take trades from. So if you go into TradingView, and I'm on the 4 hour here, let's get on to the 1 hour. You can see each time, I need to go 30 minutes. You wouldn't have taken the short here, even though it wasn't SFP, because you just got this level so just a little bit higher. This is why arguably I wouldn't have even taken this one, because you've got the level just a little bit higher that you kind of want to tap. And if you zoom in, these aren't, you would argue this one here was, let's have a look at them. I didn't trade this because it's very late at night for me and I was already in a long, so I wasn't too bothered about trading it. You've got positions changing hands here. You've got 5 million delta there on a 1.4 million. So granted, not too much. Position changing hands about 3 million, but that's a solid short setup there. I doubt it really took you anywhere, and the chart's not got your VWAP or anything here, levels wise. But you can certainly, if you're scalping, normally you're taking profits after $100. So you've been given one there, and then this one here, you can see this move up into what was another swing failure pan again. Was a weaker attempt at going higher. The volume is there, okay. I will admit the volume was there, but really looking at the delta and the open interest of this move up. The open interest, was negative. It's not what you want to see when you want to see, when you're trying to break a high. You either want to see, really push on past the level on decreasing open interest. That's where it's, stopped out a load of people and price is just, completely going on a free for all. It's just going as high as it can until it finds, resistance again. Whereas here, when you've got decreasing open interest and you're trying to break this high and it's not really going anywhere, it's a weak attempt at taking the high. And the fact that you've got the delta being pretty much non-existent, okay, you've got 2.3 million here, but in the two candles where you actually take the high, it's pretty much nothing. It's just over 1 million. It's nothing compared to what you've been having looking at the other previous highs. Here, 1.8 million, 4.9. Here, only 1.9 actually, and 3 leading up to it. So it's, this is really nothing compared to what you've had. But in the end, you are getting open interest increases on buyers immediately. This is in this candle. These buyers are all coming in at the top. You can see here, you're getting a complete finished auction. You're getting three, I don't know what the word is now. My mind's just gone blank. But, this is what you could call a secure high when you've got these zeros on the selling side, because it's just buyers being exhausted, and then price just has to go down because they're not up here anymore. There's no people shorting into here, but when the buying stops, price just drops back down. So it's a finished auction. It's this is a good auction here, and it offers you another trade for the day, which would have taken you down, quite a fair few $100 compared to what we've been having. Quite a few percentage there, down to where we were basing around today. Today has been a rather slow day to trade. I think we were just spoiled yesterday. I'm talking about in this section of the charts. You've not really had too much going on. You've had bearish divergence forming the whole day. So, you have had possibilities to trade it. But what I was mentioning in the group is the area that you want to lose, because you can go into the charts and you can identify where these buyers are coming into the market. So when we spotted that there was bearish divergence, you can zoom in and you need to identify what type of divergence is it. Is it positions changing hands, which means a bigger trader is filling a bigger position going against the trend to then push it away, in which case you have to enter on his strength, pushing it away? Or is the divergence on a load of buyers coming into the market and yet they're failing to take it as high as you previously were? And the way to trade that one, well, you have to identify where they've come into the price and think, okay, when price gets below their entry, that's when you're going to want to, take the trade. Granted, you're not going to catch the high, but you're going to catch the move. And we mentioned where that was. It was the day open, because, you can identify that we've got bearish divergence, but once you've identified what divergence it is, you really have to look for, where are these buyers going to be put underwater? Where are they going to start stressing? Because it's all about psychology in trading. So where are these buyers that have entered in this section of the charts? Where are they going to start panicking? Where are they going to start closing their positions? And then where is the stop loss? So once you've identified, it's the day open, you have to wait for the day open to be lost. And we didn't lose it. We bounced from it. We didn't really have anything to go off here to make us want to take the short. And here we are. We're getting an open interest increase in this rally, which, it is a good thing to go higher, to go to that Q4 open. Now, what we can do is we can kind of zoom in and look at the charts and think, okay, where do I need to start thinking about going short if this does start to come back on itself? Well, thanks to open interest and delta, you can really just zoom in and look and say, okay, we've had a huge open interest increase here. Granted, not on too much positive delta, but open interest is a contract between two people, a buyer and a seller. So there would have been buyers in here. Granted, it's rather neutral delta, but you can kind of pinpoint, okay, these two candles here. If you start to go, and when you do this, you'd probably just look at this and say, okay, I'd probably just say 19,000 at this point. If you start to lose 90,000, you could use the previous day high. It's kind of an area to look at. If you start to make your way back in between 19,000 and 1942, maybe then you'd want to start taking a short. That's when you want to start thinking about it. But you can't be taking shorts here when you're not at the levels that you want to trade from, just because, it's too high, I can't buy here, I'm going to short. You have to sit on the sidelines. You have to use patience and wait for your levels to be hit. But the fact we are getting open interest increases on negative delta, it shows you that people are shorting here. Granted, it is the golden pocket, so it's understandable why they're shorting here. But when they're coming in and trying, very aggressively to enter into their shorts, if they're not pushing the price away, a significant way, well, then you can start to think, okay, with prices as it's doing now, these shorters here, this is where they've all entered. You can spot it all in the charts. Now, if we start to range here a little bit, what's to stop the market maker from thinking, you know what, I'm just going to go take these shorts out? And that's what it's most likely to happen here. I do expect it to go up and tap that Q4 level. I really just can't see it after looking at this stopping here. So, it could come back down. But ultimately, when you're getting shorts entering, they're not really pushing the price anywhere, significantly anywhere. You can kind of identify, okay, where's their liquidity? Well, it's above here. And then what's the next level above here? Well, it is the Q4 open. So that's kind of what I'm looking for now, to be fair. I'm looking for it to just take us to that level, and then we can reassess from there. But that's pretty much all I've got to say. We haven't got any single prints to go over. Yesterday, actually came back and back tested it somewhat. I know if you go to the lower ticks, there is, but I like the 50 tick just to gauge my single prints personally. I will go down and lower tick if it's there. If you can see it on the 50 tick, I will go down on it to a lower tick to then really narrow down the levels if I want to. Depends on the single print. But yeah, we haven't got one from yesterday. So from a TPO standpoint, this is you've not got any efficiencies here, and you don't have a selling tail as of yet on this in this day's session. So from a TPO standpoint, the high is not in. From a volume standpoint, the high is not in. From an order flow standpoint, let's actually look and see if you've got a finished auction. That one wouldn't count because it's on the next candle. You actually need the auction to have finished up here. And we've not finished the auctions here like we got yesterday. If we go back over here, apologies for zooming back. Like yesterday when you had this is what you call a complete auction somewhat, where you've got the zeros on the left-hand side of the chart. That's where buyers have just gone to the extreme, and then they've been exhausted, and then its prices had to then come down to then find buyers again. And I say buyers, it could be stop losses, it could be liquidations, but there's just no one there actually buying, so price drops down immediately. We've not had that yet, so this is an incomplete high from an order flow standpoint on pretty much every level. So yeah, expect to go a little bit higher. Can we get a pullback? Yeah, sure. It's in the golden pocket. It can happen. But to be honest, I'm just sat in my swing failure pattern long from yesterday, just loving life. So yeah, all good. Silvio, I'm going to let you jump on.
Man, that is the most excited I've seen Max in a long time. I think that we missed an opportunity here for possible hands with just Max talking about SFPs in that accent. If you grow out the mustache, though, man, I think that's definitely something that's going to draw in some more attention for us. But looking at Ethereum, otherwise, so just kind of looking at this, kind of blank at the moment. We're going to build this out a little bit. Price action is right at daily open, right? So we kind of had, you know, a push high, higher push yesterday after this little Bart Simpson, right? If anybody's looking at it in that fashion. What this really did, however, was, you know, actually come up. We met a high time frame average, right, which we were going over on our members only stream the other day, which is our 6-month average of price, right? So for the last 6 months, so from the second 6 months of last year, which comes in right here at about 14,010, right? So we met that the other day, kind of had a little, you know, push into it again yesterday, had the CPI data come in. Where did we actually find some support at, right? So just kind of looking at this in the sense of how you could have identified this. But yesterday, this was actually the previous day value area high. We had our daily pivot come in that region as well. Looking at the high time frame range that we were in, right? We essentially had broken out. That was our back test right here. So pretty indicative that we're going to see a little bit more upside here in the short term, right? So just very similar to any other, you know, pattern you would trade in the market. You get those breakouts, the back test. I mean, that is definitely an area where you want to be concerned with, right? So even dating back to the beginning of this year so far, a couple weeks now, but the 1204 entry right here, which was at the time our first weekly pivot. This was also the back test of the previous week range, basically the last week of the year right here. But this was the similar, you know, aspect. You had a breakout, you back tested the previous week range, all these highs right here. You had your weekly pivot right here. So this was, you know, a really good entry. And then obviously we've, you know, made our way up a couple of statistical targets along the way. What is, you know, left above us right now as Bitcoin's coming into the golden pocket as far as a macro level above, right? So looking at this from the same idea is that you have from 1681 down to your local low right here, and we have a gold pocket right above us here that has been front in at the moment. So it's going to be interesting to see, you know, if we actually come through and meet this for Ethereum or not. Similar to how kind of Max was just going over, where it's like you get these really decent moves here, but when you are just so close to something like this, you know, you have to anticipate that this is going to be met. And this is coming in at 1446 up to 1466. Along with that, you do have, you know, an additional quarterly pivot here. So this is another high time frame average of price, you know, just above us as well. So, you know, a good amount of resistance just overhead, good amount of, you know, area to consider for a take profit. You know, will we actually get the pullback from here, you know, is the question. And as far as just actually front running this, you know, what you'd be looking for the near term would be to see that 6-month pivot, you know, basically lost. So coming back below, I'm on the 4-hour time frame right now, and you can see that we, you know, got that wick into it yesterday, came down, you back tested our range, right? So just kind of piecemealing this all together. Got the 6-month pivot yesterday, come down, get the back test, previous day value area high, or yesterday's pivot as well. So I mean, there's a good amount of you know, support coming in this region. This was also when Bitcoin came down, back tested daily open. So I mean, there was a good amount of confluence along the board that, you know, this was an area where we're going to see a decent little bounce from. So far, really kind of challenging back into the 6-month pivot, right? So living within this little area. So on the 4-hour time frame right now, you know, we started closing below, you're pushing up. You got about 10 minutes before we actually close another candle here. You know, if we do so, you're going to be at that point claiming your daily open, your VWAP, 6-month pivot, a couple other things as well. You're going to be living outside of yesterday's range, and then, you know, challenging into this region is just. You have to anticipate it, right? At least coming up to about 1466. The thing that would change that for me in the short term would be basically to come back down and start living back below 1410, right? So get that daily close below here, especially. But you know, you get your 4 hours and, you know, higher time frame, start getting decent closes down below here. That would be the idea. As far as any downside would go for a pullback, otherwise still looking, you know, potentially up higher. Not an area to be entering long. Same thing, right? This is, you know, these are take profit areas. These are more so targets than entries in the short term here. You know, you could be looking for some short positions around these regions, but you know, the longs are definitely, you know, to be had from lower at this point, right? So just something to kind of consider there. But yeah, that's you know, pretty decent area just above us there, with some confluence. Now, if we were to see a pullback from where we are now, let's just say we actually do lose the 6 month, you come back down, you lost your daily open. We're going into the weekend, which is always an interesting time frame to see how things play out. But looking at a couple things from this week that we left behind, one of which being that you got a untapped weekly pivot back down at like 1260 basically. And if we're pulling a local gold pocket from where we are now, you get that local gold pocket from the recent low to the current high, aligns well with that also. And then also, with that case, you'd have a slew of smaller targets along the way down here. We got the weekly open comes in 1290, things of that nature. So coming back into this region would all, offset some or open up some different areas essentially. So just something to, start being aware of. And like I said, that's if we start losing the 6 month pivot. So 1410 for me is that level at the moment, if you're not, currently positioned or things of that nature. And then looking at putting potentially down to this region here. Otherwise, it's definitely, let's see here, I had got the current month range, right? So, okay. Also, I brought that up because we got January's range building out. And even though we have all this volume or all this price action building up higher, you can still see that the point of control is actually all the way back down right at that weekly pivot, right at that gold pocket. So another area, if you're paying attention to this over the weekend and we get a decent little pullback and potentially even just into next week, maybe we just kind of trade sideways, we push higher to the gold pocket, root around up here for a bit, and then Sunday night when everything reopens, you get that pull down. But some decent confluence down here if we start breaking lower, right? So you got the 6 month really is the line in the sand, to start breaking back into the January range, right? So that's down at like 1340. So it's a big gap before kind of realizing, that move is underway, but still there's, potential entry ideas there. If you break back in, get the back test of the value area high, at that point you'd be targeting your point of control anyways. Weekly open is probably going to offer up a decent little, short-term bounce. And then like I said, you got weekly pivot, gold pocket, and you got the point of control all stacked right here, 1250 to 1260. So still an area to really be aware of there. Looking at this back test yesterday as well, right? We were looking at the Q4 is our high time frame range that I was looking at yesterday. So you got the breakout, the back test. You also had the our regression from that time frame as well. Really clean breakout back test there is also. So once again, just a really not even just the two of these ideas, because like I said, this was yesterday's pivot, yesterday's previous day value area high. I mean, there was so much here that we were basically flipping into support, and take even the CPI data out of it, because that's the timing was then when this occurred was right at the CPI release time frame, but all we did was literally a breakout back test and then continued up. So I mean, the gold pocket above is something to, really be kind of aligning with. It's definitely interesting to note that, as we're coming into this region, Bitcoin's also pushing into that area also as well. So if we push any higher for Bitcoin, that's what I'd be anticipating out of ETH. Otherwise, it really is that 1410, just going to hammer in that level right there. 1410 is the big one for now, to come down, lose, get a back test, that potential that, that we're going to come back down and probably meet this 1260 region. Is definitely there. So otherwise, let's see what else I had on there. And then like kind of just get into a bigger picture here, right? So similar to Bitcoin, right? You got a lot of these highs coming in here, with the idea of potential, let's just get into a really decent little macro idea, right? Let's just say we, even if we get this pullback 1260, push higher, continuation, a big area to be looking for, if Bitcoin pushes up to potentially, meet that yearly pivot, where does that yearly pivot come in for Ethereum, right? We've talked about this once or twice, but just to kind of get, just get back on here in the same stream, we've been considering this with Bitcoin. Well, that comes in right here at right about $2,000. So in the idea that, this is a pretty decent bear market rally, right? You come back down, let's just say we get our higher our higher low, right? So now you got a series of, you get your uptrend being built out here, even though you do have potential to just be coming up and making, lower highs across the board. But if we do get that, final breakthrough, which really, potentially could start right here, obviously we need to take out this high all the way back up at 1680. But like I said, flipping this gold pocket, which in turn would also be getting back above this quarterly pivot. So another high time frame average of price. You'd be living above your 6-month average of price as well. These are big areas to flip here, right? And then at that point, over time, maybe a couple months, to kind of prepare for this, but $2,000 is on the table, for sure. And then when you look at that also in the sense of what would that do, effectively is that, you come through and you take out all these highs. So you'd be coming in right, basically, I love when Max says it, but you'd be coming in right bang on, right, at this last high here, which was equivalent to when Bitcoin was at like 25,000. So with that being said, right, Bitcoin goes back to 25, 26,000, Ethereum back in the same area. It's very plausible, get a little SFP at the high, lose this level. That would be, potential for a pretty big short, right? So that's just the big idea there. Definitely going to be updates along the way, intraday moves, of course. But this is just, on the speculative idea that push up, pull back, you don't lose this area, right? And you don't come down and take these lows quite yet. And then we actually get a push higher. Similar idea would be everybody thinks the bull market's back on, and in turn, this is just a really good, decent bear market rally, which we have not really seen the likes of yet. And I take it back, actually, for Ethereum, we did see the likes of this. So this would actually just be a secondary run up here because we saw a pretty big move back in the day. So from low to high, be a nice 84% opportunity if we get it. If we take that launch from 1260, there's potential for 60% there on ETH. I bring that up because if you're not trading ETH specifically and just kind of tracking it and this and that, maybe that's your big portfolio, your bag hold, but you're trading altcoins or looking for altcoins to kind of outperform. Obviously, if we have these moves out of Bitcoin, Ethereum, the altcoin market will, for the most part, you can expect some really explosive moves. Maybe not the entire market, maybe not every single thing. And even right now, I know the Twin brought up the idea that while Bitcoin and ETH are seeing these moves at the moment, you're not getting it out of the altcoins, and that does happen from time to time. But a lot of times also, that can also be indicative of a potential pullback coming, right? Because we saw a lot of altcoins move. Everybody jumped in on the altcoins just a week ago. Now you're seeing Bitcoin and ETH move. It's drawing up that those emotions, right? That the market's about to see a huge pump because after Bitcoin pumps, the altcoins will pump. Times where if Bitcoin pushes right now, and the fact that it's attracting a lot of the dominance and the altcoins aren't moving, right? Because you still have, there's definitely been some movement. Cardano is one that moved early. A lot of them did as well. But since the Bitcoin rally recently, we've been just kind of chopping around in this region. I do have anticipation to come up and meet this untapped pivot just above us at 35 cents, not too far away from where we are now. We came down, met our quarterly. That's where we found support. Come up and actually take this little high, would be something to kind of be aware of. But as far as huge moves out of the altcoins right this moment, maybe we don't get that, especially if you get Bitcoin and Ethereum on a pullback here in the near future, right? So altcoins are still pretty gassed up in the sense of they haven't really seen a major pullback from a lot of their rallies so far. And not to say that they have to get it completely erased, but just kind of keep that in mind. You're coming in at some big targets across the board, even Doge, right? We got a nice monthly just above us, average price, right? So 82 or 0.082 cents. We were looking at that from this support right here, which you can see is really clear support over the last few weeks here. And that would be a 16% rally, which doesn't sound like a lot for Doge, honestly. But you did have Cardano with like a 40-50% rally. Litecoins actually been blasting through. So we're actually living above this range. So that is an interesting thing to note as well. But same thing, had a really big rally, hasn't had a substantial pullback yet, 42%. So for a large cap, that's a pretty decent area. I think I brought up this untapped weekly pivot, right? So now that our little gold pocket can be scooted up a little bit, you do have potential to come back. We got a gold pocket. Originally, it lined up with the weekly pivot. Now it doesn't, obviously, but we actually have two untapped weekly pivots here. So for something to just kind of be aware of there for Litecoin, key for that is to enter back below $82, basically start living back in that region. And then, from there, you might see a larger pullback. Ocean has actually been one that's been pushing up pretty well, right? So we got the overall range high that I've been looking at for quite a while coming up soon. Gold pocket has been met and pretty much breached through at our point of control. So that's like 28 cents. So just above there a little bit also. Nearest had a really nice rally. I mean, everything has been moving. It's just everything's kind of stalled out while Bitcoin and Ethereum have had these moves. So Solana here, came up, took out all the highs. So we got one left here. Got a couple areas over here to, kind of be aware of. Will it meet them? One thing to note is that, we have seen a lot of stalling. So you get, a nice cool off essentially in price action. You get a cool off in the RSI. Granted, you potentially could look at this as a double top, here. But yeah, definitely not an area to enter at the moment. If you're already in position, similar like how Magic, right? He took that Bitcoin trade really well. He's been scaling out at these levels, but still leaving some to run, but he's in from lower, right? That's the idea, is to be in from these lower areas. And one of the areas that, I was looking at personally was, I didn't catch the exact bottom, but this 999 was an area that I got in at. Didn't even take this on leverage. It's just a spot trade. I actually did get out at the point of control personally, just because I was moving that to a different, position with Ethereum. But if you, were to have held something like that, this is the idea, is that you don't want to be entering here, but you could leave positions open to potentially run up to here, stop losses, just below, recent support. Otherwise, a pullback is on the table. I guess I should say that, right, for a lot of the assets that we're looking at. So pretty much the whole market at this point. Can we go higher is the question, right? So you do have some areas just above us, Bitcoin specifically, and then it's, the game of, do we actually crush through those, flip them, and then from there you want to look for entries, right? So I know that seems weird whenever we bring those kind of ideas up, that it's like, oh, you wouldn't necessarily enter right here, but if you were to flip this, then potentially there's an opportunity where it's higher, right? So I hope you understand that that's all based on risk, because now we run the risk of a pullback being, in the near future right here. And the idea really would be, if you were in position, you take profit, you take profit, you take profit. And even if you were to pull out completely right here, right, the idea would be you could very well re-enter right there, and essentially you'd exit here and then you basically re-enter there. But you get the confirmation, or at least more probability, that you continue higher, versus just coming up here, catching the rejection, not realizing it till you're all the way now back down below the 6 month, and then you lose out on that. So it really just comes down to how you entered, where you entered, and what your strategy is, and how things are. It's very up to the individual, I guess, and that's why certain things like signals and things like that, they can really be hard to. They just don't work, right? Because everybody has a different lifestyle, and everybody's got different things that they're working on, and time frames that they can pay attention to something, depending on if they're going for a short-term trade, they're just looking to increase their bag, looking for a potential, pull out of the market 25% to look to aim to, buy back lower. Like, it's just, there is no right answer, and you really have to determine that for yourself. So that's what I'm looking at here. 11:05. I do have a hard stop here at 11:10 personally, so I think that's where we're going to finish it up, unless you gentlemen have anything else to look at.
I just want to mention to Farouk that's said, does BTC demount for alts at this point in time? Now, Magic, you can jump in and help me on this, but I always remember the saying being, you normally get a spike up in Bitcoin dominance, and then Bitcoin goes up first, and the alts get dragged up with it. Now we are getting, a bigger rally than most alts. So when Bitcoin starts to range, if we start to range around somewhere at any point, that's when I'd probably presume that the alts then get dragged up with it. But yeah, it does look pretty bad for alts if you're just looking at the Bitcoin dominance chart. But I don't believe that you can do TA on it. Sorry, CV, I'll just rob it from you. I don't believe you can do TA on this, but if you can, which I'm not sure.
I think you can do TA on it. It's just one of those things where you are correct. The market rotates, in my opinion. So you're going to see most of the money shifting into, some of the bigger caps like Ethereum and Bitcoin. Some of the alts are going to do their thing. Now, if Bitcoin dominance is generally going up, so here's the rule of thumb. If Bitcoin dominance is going up and Bitcoin price is going down, alts are going to get absolutely shellacked. They're going to get crushed. Now, if Bitcoin dominance is going up, but the price of Bitcoin is going up, the alts aren't going to get crushed, but their USD value is going to go up. Now, against Bitcoin, no. It just means that right now, it's better to be holding Bitcoin, in my opinion, but that does rotate. Eventually, let's say Bitcoin doesn't go up and then just come down and crash like it did back in 2019 on that massive rally, right? Let's say it goes up there and it ranges and puts in some decent market structure, then yeah, you might see alts start catching up a little bit. And that's when, it's fun to rotate capital into some of those, middle and like lower cap coins that can really pop off. Some of them have had good pops. Like I got into DOT. DOT was a nice one. That was like a 20% move off the box we had. Algorand is up 25% off of the levels we gave. There's some that did all right. There's some that are disappointing me a little bit. Like QNT is one of them. QNT is, I've gotten my first take profit, but it is lagging behind a little bit, so it is at resistance though. And I think that once it pops through, I do think it's got a really nice chance to go to the upside. And so we'll see exactly what we get out of Bitcoin. If Bitcoin comes up here and puts in some constructive work in this range and starts reclaiming levels, I see no reason why money won't eventually rotate back into altcoins and they'll have their day in the sun too. So, I'm a bit of a Bitcoin maxi in the sense that I believe a lot of these projects are, probably going to the wayside over time. I think eventually they'll all trend to zero. Not all of them, but a large majority. So I am pretty selective on which ones I get involved in and when I do so. Bitcoin and Ethereum being the main ones that I'm interested in. Chainlink, Polkadot, Atom, Cosmos. I got a little bit of QNT just because the chart's easy to trade. Things like that. That's all I've got.
I would say that you can absolutely use TA with Bitcoin dominance, and I used to use Bitcoin dominance TA with just pattern trading, right? So and right now I don't see anything that would really constitute that. When we were trending, it was definitely an easier, and I say easier, but it was you could kind of manipulate that a little bit better or find a pattern, and this is just straight chop, right? So but utilizing this is just looking at this as an overall structural range here that we've been in since April of 2021. I would say that you still got potentially a little area to the upside here. And one thing that is interesting to note, and the only thing I guess I would say about this is based on volume, is that I don't know how this volume is depicted because you can't trade Bitcoin dominance, but it does show up here, right? So unlike you can't pull this up on like DXY, things of that nature, but there is value areas that pop up. So, take that for what it's worth. The other thing is we use a lot of high time frame averages, right? So Bitcoin, same as anything else, has a yearly pivot coming in right at the point of control, right above, you got a little bit of a box, I guess you could call it, right, that we generally kind of would mark off. So you got the EQ of the range, you got point of control of the range, and then you got the overall yearly pivot, which comes in just above us about 43.15%. So to me, it's likely we probably go up to these levels here in the short term. Flip that, obviously from there you're probably looking up to a potential full range rotation up to like 45%, but either way, looking at it just without the range itself pulled up on there, just that the average of like anything else, the mean reversions, that is something to kind of note. That, and this is untapped so far. This is from last year, so we haven't necessarily made it back and tagged it yet, but that is just overhead. So does that fare well for the altcoins? Probably not, right? So but that doesn't necessarily mean that the altcoins can do exactly what they've been doing, where Bitcoin just kind of continues up and the altcoins stand still. And that's basically what they've been doing for a little bit. However, something to note, something I put in the group a couple of days back, which this is the one thing about, RSI divergence, is that it can take a while before it actually plays out, but it is something to just kind of keep in the back of your mind when looking for new positions. You got a ton of bearish divergences on high time frames for a lot of altcoins. So if we do get a pullback, that time is probably around now, right? And it would make sense that a lot of these had over 100%, 50%, 60% moves. So just something to just kind of be aware of. That's all I would add for that as well for Farouk. Awesome. Well, that is all the time we have for everybody today. Do be sure to like and subscribe to the channel if you guys are interested in our content. We do this every Monday through Friday, 10-ish a.m. Eastern. If you're interested in joining Leading Crypto Discord server, the information for that is in our information box below. We also do host 2 member-only market updates. So if you're interested in joining that and being a part, to get a member-only market update on Sunday, we do that right at the weekly close, 9:30 p.m. Eastern. You can come in there, ask questions. You have our undivided attention for about 2 hours. So other than that, that's all we got. Enjoy the rest of your weekend, everybody. Have a great morning, afternoon, evening, wherever you are in this beautiful world. And until the next time, I'll hit it, Max. Cheers.